Welcome into this week's edition of On the Spot. I'm Tony Mulvey, joined by Donnie Gilbert. Donnie, I'm going to touch on something that we touched on a carrier up to today, talking about intermodal volumes, and I'm going to focus specifically on domestic intermodal volumes.
Yeah, a little bit different than what I was talking about. I was talking about all rail volumes, and a lot of people may not understand this. There are containers that are shipping containers that go on the boat that can transfer to the rail and transfer to a truck. And then there's domestic containers
that never leave. They never are on the boat.
Yeah, but they're also, those can be up to 53 foot, which wouldn't even fit on the boat. I'm sure they can get them on there somewhere, but exactly. So they stay here in the U.S. and they don't move.
Yeah, they're very distinct markets. And some of the times when we talk about intermodal volumes, they get lumped together and they can react in very different ways, right? What J.B. Hunt and Schneider and really, Knight Swift, who's grown their container fleet by almost 40% since the first quarter of 2018, what they experience versus what the steamship lines that own or lease their containers, what they feel can be very different. Right now, you're seeing domestic intermodal, total domestic intermodal, so both loaded and empty, hit really a new all-time high. We pulled it back to 2019. We're at the all-time high right now. So it's kind of looking for an answer why. It's not solely loaded volumes. Empty volumes have gained momentum over the past few months as well. It's not.
But you have to watch those empty volumes. Like, why are empties moving?
Yeah, they're only moving to go pick up freight. They're not moving for just any.
And that's an answer that everybody needs to understand. If you also track empty containers, you might find a hot spot that's about to build up that others may not realize.
Yeah.
And that would be, if they're sending them to Omaha, Nebraska.
It's a repositioning of an asset, right?
They're expecting to load those in Omaha and move a bunch of freight out of there next. Now, if you're a trucking company and you're seeing all this rail volume, depending on if it's grain or something, we shouldn't use Omaha. Let's say Kansas City. If it's a lot of products, you might be able to fight in there and get some trucking freight out of there too.
Yeah.
Or you may realize that trucking volumes may drop as well.
Yeah. So let's look at what's going on loaded-wise, right? Not at an all-time high. We are actually below where we were in 2020. We just looked at total volumes up.
At its highest ever.
At its highest ever. Loaded's not, which is an indication that empty volumes have grown significantly. And part of the reason that this appealed to me was that if you look in earnings releases from major IMCs or intermodal marketing companies, what you see is they report the average number of trailing assets in a quarter. And I was like, well, let's go back and look, because we've heard about investments being made to grow, especially from J.B. Hunt, talking about growing their intermodal container fleet. I was like, well, let's go back to 2018 and look at the growth. It's about almost 32%, right? 31% growth in the number of trailing assets on average. And that was through the end of the third quarter, right? So Q1 of 2018 to end of Q3 2023, about 30%. Knight Swift, almost 40%. You've seen the investments in this intermodal. I think the question is, and this is a conversation I've had offline, is what is the difference? Like, why are they investing so heavily in this? I think one of the interesting things is, one, they already, from their perspective, they already have the customers that they can go sell into. From a railroad, they're partnering with these companies. They're letting them handle the sale process, the sale side, and just going, hey, we can strap this on, we're gonna charge you. And you brought up a great chart in the carrier update. The spread between truckload and intermodal is what, 49 cents between spot rates? Why not move something intermodal if it makes sense to do it when you have the available capacity?
Railroad seems to struggle to get into the trucking markets very heavily. It's hard to swing customers. But if you have customers like J.B. Hunt, Knight Swift, that are already deep in the trucking markets, and they can pull freight, put on containers, and move it on the rail, those are good people to partner with to steal market share from the trucking companies and move them directly over to rail.
Yeah, because when you think about it from a shipper's perspective, it comes at a discount. yes, you lose a little bit of the control in terms of there's more handoffs on an intermodal.
But you think about where shippers are coming from.
Yeah.
A year and a half ago, 2 years ago, they blew through their budgets of shipping. They blew through their budgets by July for the entire year. So now they're coming back and trying to find different ways to make their shipping a lot cheaper. Even though we're in the bus season, this is a great time for those shippers to make those conversions.
And you don't have the time-sensitive nature. I think one of the interesting things is, and it's the green line looking at, is the savings rate. It's actually fairly low historically, which would be, why would you do this? Well, why would you do it? Time sensitive. I don't want to take hold of the inventory and just stick it in a warehouse right now. I'll take the extra couple transit days that it takes to move some of this loaded volume, and I'm going to get a 10% discount. It sounds pretty good to me.
And save. We looked at our LMI the other day on cost of inventory.
Yeah, because those are so high.
Still growing very, very rapidly. So good point.
Absolutely. So Donnie, thank you so much for joining me on this week's edition of On the Spot. Right now, we'll take a quick break. We'll be back with more Freight Waves Now.